Morning again, people. Right, I couldn't leave these two charts, the gold and cable that I'd done, without saying a little bit more about what I'd done. And I think I will create a brand new cable chart showing you all the levels that I drew this morning again. But I just had to say, look, what's important about this is that March is showing green. That could change to red, of course, and resume this down move. But the levels that were drawn on here were all drawn for a reason. The previous month, that's February, all we've got ahead of us is that monthly high there that's drawn on this chart. I could draw another high on the previous month, but that would be surplus to requirements, really, to be honest with you. Because look at this gap here, guys. I've drawn every monthly high and every higher time frame high on this chart. That weekly high there, that weekly high there. I imagine that weekly high, I didn't forget that one. Let's just draw it on again, see whether it makes any difference. No, it doesn't. So that weekly high there. So look, between where we are today and the next candle, the previous candle, we've got clean air, and I did it on the daily as well. So what I'm trying to say is, and I ought to put a disclaimer here, do not trade anything I say to you. I'm not a trade advisor, I'm not a trade picker or whatever you want to call it. I'm just a humble trader, enjoying making charts live in front of you. So we could put that on there now, because obviously that would be relevant if we broke through all this resistance and old support levels here as well, that weekly low. Then where else can it go, really? It's that straightforward. So I just wanted to bring that to your attention. And while I'm here, I could put a descending trend line on there that I didn't do earlier, but that wouldn't really matter, because, as again, you know, we're not going to start worrying about it until price starts to potentially get near there. So daily, again, nothing between these levels. That previous high there, that previous high there. I'll just double check I drew them both in. I didn't there. So we've got a daily high way over here as well. So that's additional problem area, but there's still a huge amount of room between the two daily highs there. Reduce the size, or zoom should I say, and then, you know, so hopefully this is showing you how my mind works in these levels. Then I can draw the H4, the next level that will concern us. Above us there's nothing actually. We'll check that H4 level there, that little candle there. Excuse me. So now you can see how I approach these levels. So we can go back to an M5 chart now, or let's have a look at M15, see what that shows us. Excuse me. So there you can see my trade, M30. These charts are a bit squeezed up now, so we'll go to M5 and see what's above us. So we've got that weekly low above us, which is 8.4 pips net of spread, so about 6 or 7 pips ahead of us. So that's support, old support potentially acting, and that's from 1st to the 12th, 19. So that's going to cause us a bit of a problem, but it is a target area. And then we've got the big 129 level there, and then above that we've got the another weekly low. So, you know, there are opportunities there, guys, and that's the point I'm trying to make. It's all about clean air above. So up to that's 16 pips. You know, then you've got an automated resistance level created there. That pink thing I'm looking at, 21 and a half pips above. So this is how I trade this stuff, guys. It's just that straightforward. In fact, I don't need to do all the levels that I've shown you, because I've just shown you how I draw them anyway. So, and that's it. You're looking for clear air, and look, that was a no-brainer. There was nothing above us between the H4 high and the next H4 high up. And while I'm here, something I didn't mention, but look how that old weekly support of the 9th of February, weekly low, acted as resistance, pushed price down, acted as resistance, pushed price down. Finally, price has broken through that weekly low. And there's, you could say, okay, I'm looking at this level here, but they're all arbitrary levels. But what we know, the difference between an arbitrary level from sweet spot gold and this weekly low rather, is that this is actual, that is just arbitrary, as I say. And what came first, the price behaving to this level, or the price finally creating this level? And it's push, failed to break it again, finally breaks it, and then uses the weekly green here, this weekly support level, as support, and then finally breaks on up. So I'm a firm believer, massive believer, in both the arbitrary and the actual support and resistance levels. But you can clearly see there was nothing to actually trade to except the recent resistance level and the break of the recent H4 resistance level, and it did what it said, did what it told me anyway. And gold, incidentally, I spent a lot of time, an hour or so, drawing levels on there and studying it, and the only reason I'm concentrating on gold is I like the way it moves anyway, and I spent the whole day watching it and trading it yesterday successfully, studying what Digger does with the 8 hourly moving average, which is 4 times 8 for the M15 and 32 on this particular chart. But let's get down to the 5 minute. As I said to you, I was bullish with gold, and prior to 7 AM, which is the pink line here, what happened on gold? You can draw a trend line across these these highs here as well, slightly descending, or as I prefer to do often is draw it on the line chart. Excuse me, and we can connect, go to the latest resistance levels from the oldest one, and we can clearly see that broke through. It was testing what happens to be the daily pivot line there as well, and finally breaks through it, and the move was worth, from our indicator entry, which would have been around about here, it moved 23 pips. So I settled for a portrait 6 pips this morning, which is my bread and butter, it's my day's work. If I'd been a bit more aggressive and used the information that I gained yesterday studying gold all day, I should have considered that instead, possibly. But I'm a conservative trader. I've got my targets. Anything else is a bonus, and I can guarantee you I will be trading gold and scalping that today, as well as using the other opportunities available. Anyway, my throat is about to give up, so there's the end of this video. Thank you for watching. Let's just quickly go through, while we've got it, we've got all the levels on there. Not sure we did this in the previous video, but clearly see monthly is green and bullish. So the indicators do work. I do use the indicators. Again, the weekly green and bullish, the daily green and bullish. There was no way I would want to consider going short on this thing, we turned green the previous bar, and we just had it. This is just representing retracement. We could draw an descending trend line on there now. Clearly see what's going on there. Excuse me. And remember, all these lines were drawn on this chart this morning. This was a clean chart. Not sure whether that's so it looks like a complete and utter mess. I know that. I'm smiling as I'm saying this to you, but you can clearly see we've got R1 above us as well, the pivots, and we're above now the central pivot on the H1. Again, bullish. Now we're having a little pullback during this hour. So if I were to trade this, I'd be looking for longs, and I'd want all the other lower time frames now frames. So this is still bullish on the R, but showing a little bit of pullback on my indicator. So I can't go long. I could have gone long at prior to 6, because all of this green, excuse me, prior to 7, should I say, sorry, green prior to 7, which was why I was happy to go long, consider longs. Now it's dangerous. So, you know, they can be used like a traffic light system, to be honest with you, and you could call it traffic light trading if you wanted to. Not sure whether anyone has, but we've now got you know, a double top there. These two spikes that went through on the M5, admittedly, but what do we know? In fact, it wasn't a double top, because I wondered why that was a bit pinky. It's just a single top, or a spike, whatever you want to call it, shooting star, inverse hammer. But we can draw a descending trend line on that lot now, which is breaking. Excuse me. The reason I don't draw it to that level is purely because it doesn't, that over there hasn't made a lower low. That was the last low, so I'm connecting highs that make lower lows, and there's a high there that made a lower low there, and that's just how I draw my trend lines. Everyone's different, but you can clearly see that on the line chart now. High, low, lower, high, lower, low, lower, high, lower, low, and then you could call that a double bottom, I suppose. So you could have tuned that up a little bit to that one there, but either or, it doesn't make that one valid. That's why that one's invalid, in my opinion. We all have our own rules, and you have to develop your own after your thousands of hours of chart time. Anyway, I hope this helped, and sorry if I've been a bit croaky and wandered off topic a little bit, but you know, that's how I view my charts, guys. I can see this 1 minute now is turning, but we're not even turned on that. And remember now, we are in the midst of the big boys trading, and that's important. And if you take anything from today's 2 videos, is how I absolutely adore trading pre-Frankfurt, and whatever happens, I want to be out of that trade before 7 AM the bell rings on the Frankfurt guys, because they will mess it around, and I am not interested in trying to double think what they are doing. I am just interested, well, I am sort of interested in what they're doing, because I know they are driving it to a place, grinding it up or down to an area where they will smash it. Excuse me. Anyway, thanks for listening. Have a good day.